that? Well, making money by getting out of the U.S. dollar and buying non-U.S. dollar assets has worked out quite well for Peter Schiff and his colleagues at Global or Euro-Pacific Capital. He is the president and chief global strategist for Euro-Pacific and joins us now here to talk about what's working and why. Why is it that you are so adamant about getting out of U.S. dollar assets right now? And is this, that has worked, but is it still going to work?
Well, I think the lion's share of the dollar's decline are still in front of us. And the main reason to get out of U.S. financial assets is to get out of the dollar, which I regard as a sinking ship. And you definitely want to get out of it before the ship is completely submerged. Why
do you think the dollar is a sinking ship?
Well, I think our economy is fundamentally flawed. I think it's based on two false premises. One is that you can consume without producing, and the other is that you can borrow without saving. And right now, what the American economy consists of is Americans borrowing money from abroad to buy imported products. And in the process, we're running up enormous trade deficits and current account deficits. We're putting our IOUs in the hands of our foreign creditors, and we're going to have to service this debt as interest rates begin to rise, and I think they're going to rise a lot more. The debt's going to be an increasing burden on our economy. And the real problem is the money that we borrowed from abroad, we didn't invest it in plant and equipment. We used it to fund consumption, which is the worst possible use of debt.
You sound a little bit like Warren Buffett or maybe Bill Gates. Good company to stay in, but they're a bit contrarian, though. There's not that many dollar bears out there, at least in the short term. I guess there's two schools. You're a long-term dollar bear. You're not talking about trading currencies.
I'm a long-term dollar bear, but I'm also a short-term dollar bear. I mean, I think the dollar's going down in the short, medium, and long term. And I think the best thing that you can do is, don't fight that trend, is work with it. And we've been investing for our clients for 5 or 6 years, almost exclusively in non-U.S. dollar assets. And in addition to the much better dividend yields that you get by going outside the United States, because markets outside the U.S. are much better values as far as you can buy stocks at much lower PEs, you can get much better dividends. Those dividend yields that we're receiving are being paid to my clients in foreign currencies, which are appreciating on an annual basis.
Dollar index is up 8% this year. It's been one of the best performing currencies in the world. Has that made you second guess yourself at all?
No, in fact, this has probably been one of our better years over the last 5 or 6.
In terms of actual net yields to investors, that's why the bond market has been so royal, because there are some economic problems, but the comps versus the major industrial economies still appear favorable.
Well, I don't think so. I think when you're looking at our gross domestic product versus, let's say, gross domestic product in some of the other countries, and people look at it and we're doing better, what GNP is really measuring there is consumption. And what isn't being paid attention to is what's funding it. We're not funding this consumption out of real production, out of savings. It's debt. And so what we're really measuring is how much wealth we're dissipating, not how much wealth we're creating. And I think it's an illusion. I also don't believe the government numbers with respect to inflation. I think inflation is being understated by the government, which automatically overstates growth.
What do you think is a real inflation number?
I think it's somewhat north of 5%. I mean, I think it's probably a lot closer to 10% a year than what the government is officially reporting. And you can see that in the money supply, you can see that in the exchange rate, and you can see it just in general in your cost of living. I mean, prices for a number of things. You mentioned crude oil just a few minutes ago, but that's not the only price that's been rising.
We only have about 20 seconds left. There's the old locomotive theory. If the U.S. economy slows, it's going to pull the world along with it. I mean, that is going to not...
No, I think people have it backwards. I don't think we're the locomotive that's driving the world's economy. I think we're the caboose that the world drags behind it. I think we're a dead weight, and I think once our economy tanks and the world stops subsidizing our consumption, that there's going to be a lot more resources available for everybody else, and we'll stop dragging them down.
Peter, fantastic. Thank you very much, and I appreciate your opinions. It's great to see somebody taking a strong stance. Peter Schiff is the chief strategist with Euro-Pacific Capital. Stay with us. We're taking a quick break, and we're coming right back.